Now from the Latvian Banking Association point of view, we've just finalized the work on guidelines and the policy on anti-money laundering, where we've adopted a stance that the banks will not be serving the clients whose main income is derived from cryptocurrencies and similar instruments, understanding that this is an unregulated and high-risk market at this point.
All right. Does anyone else has a different opinion on this?
No, I would briefly continue, and my name is Šarafutdinovs from SEB Bank, board member. The background a bit is studies and also lecturing in terms of economical cycles and you know those booms and busts, and from that angle I'm extremely skeptical when it comes to currencies that we are currently discussing. I definitely agree that technology as such is very, very fascinating, and there is no doubt about that this will fly. But then again, I have a very hard time to believe that without central oversight and without central bank or some central body overseeing some sort of what we call money, that this is something that will ever fly. And I will make a brief point on saying that, well, if you see this as some kind of speculative thing, as tulips in the history, as seashells, as something that is kind of resembling gold or diamonds, then fine. You can always speculate on something, and some people will earn lots of money, but many more might end up losing. But it's very important to know that money is a specific thing that allows us to travel in time. So basically, you have part of the population that is saving and then spending later on. And then you have part of the population that is spending now and saving or repaying debts afterwards. And there are no kind of people from Mars or from other planets. It is us among ourselves that are traveling in time, and money is basically the technical instrument to allow to do that. So if we believe in Bitcoin and all that, then again I might say this is a nice speculative thing if you are saving something, if you are speculating that somebody else will buy it from you at a higher price. But if I would ask you the question, how many of you would go out and take mortgage loans in bitcoins or kind of take large investment loans, then probably the answer would be close to zero. So in that sense, money is something where both sides that are traveling in time, they have a trust in some sort of central government, and you can look back in the history for the last 5,000 years, that is always the case. If you create this atmosphere that people find it nice to travel back in time, some are saving, some are investing, then the whole society develops and then things happen. But there's always central body that you believe in. Either the currency is tied to gold, as you said, until 70s, or you believe in Federal Reserve or whatever, but there's always belief in central authority. So that would be my point on this one.
Hi, my name is Jevgēņijs. I'm board member of Rigacomm Bank, responsible for IT and for automating the bank. So on responding to the question of whether cryptocurrencies should be regulated, I would like to send it from a slightly different point of view. So look at the blockchain as how people look on the internet when it appears. So initially it was something that like a network to distribute the information. Then it grew exponentially. Then there was a hype around it. So was the question whether should we regulate the internet? So the question appears from country to country. So the same thing is basically for cryptocurrencies. Some countries decide that they should regulate it, and they do. Some decide that they don't have to. So it evolves. So we see. So my point is that we should look at it as we look on the internet in the same way. Thank you.
I am not from the bank. Okay, so what I see that definitely banks will have to deal with that anyway. Maybe definitely not this year, not next year, but no. This approach I think is coming closer and closer, and we will have to deal with it. From the regulation perspective, I see one is like my colleague already touched a little bit. It's related with money laundering, but that's believe we can solve it. And second is how to protect poor people. because inside the banks there are regulations how to protect customers if something is wrong with the bank and customer is protected, and this gives quite a safe feeling. Related to cryptocurrencies, I think there is some way to go, and when this will reach some critical mass, most probably some regulators will have to do something. That's my opinion.
So, my name is Aleksejs Petrovs. I'm working for Bitfury, but before Bitfury I was working a couple of years in banking system, so and over 10 years I was working like a security auditor. So I know all the financial things from inside. So my opinion, so why the regulations exist and what the roles of regulation by itself. So the government should regulate the things just to create safe market. It's the only point. If you're talking about the human market resources regulation, did you say what salary someone should get? What the minimal salary is? Did you recommend how business should work? No, you are taking care only about the security. So you are trying to protect the market and protect the people. And in this case, I think the government should do absolutely the same thing. So if you're applying the smart regulation, it will help you to work. If you're applying the very restricted, very limited, so you are limiting your own abilities. It's economy. If you're getting inefficient space, then the economy cannot be competitive. It's like a fish market. The fishes, they like good obstacles. If you feed them well, if you create the good obstacles, they will cave. If you scare them, if they doesn't get enough food for a feed, so they will leave. Absolutely the same happens to all the regulations. All blockchain technology, all the cryptocurrencies, they are just instruments, absolutely the same instruments and same tools like money, like a Federal Reserve. The only thing what was changed, instead of centralized structure, then you have the central authority, the mission central, the administrative central. It just distributed. The single one difference, it's just one line system. There is no centralized authority. There is no centralized control center. They are just distributed. And at the same moment, it's created a little bit more efficient system. The government should take care about the cross borders. Then it came from the electronic money to normal fiat money for normal currency. And I think it will be okay. So you can also provide recommendation why you're thinking it's risky, what the risks. But decision is always on people.
Thank you. So we have a bit of a split of opinions. Basically, on one end, everybody who is deriving any income from things like Bitcoin is by definition a bad guy, and banks should not serve such people. On the other hand, we can see that Bitcoin is one manifestation of what can be done with blockchain in terms of efficiency and in terms of innovation. So would you agree on the, let's say, conservative side of the discussion table? Would you agree that technologies like Bitcoin or whatever comes out of blockchain can serve as a basis for new innovative services also, and probably first of all in the banking and in financial sector?
I would say again, technology as such is a very good one. There's no doubt about that, and I'm quite certain. Similarly, as internet survives, it will survive and thrive as well. The big question mark again is whether this is the best technology for money, and there are no good examples in the history. You always have this brand new idea of, for example, saying that, well, in Africa, seashells is a fantastic source of money. because after every storm you have like new emission, and again there are some similarities with Bitcoin as well. So humanity always figures out something that they regard as a very good technologically advanced thing in order to replace money. But in 5,000 years history that I have seen, at least, I don't believe that there are slightest doubts that you need central authority. Again, you might be okay with investing part, but don't forget the borrowers. If you look at the world combined today, then we have $230 trillion of debt outstanding. And from one hand, if you believe that Bitcoin would be kind of increasing in value, then would you want to borrow in something that would increase in value? Because then after 10 years you would need to be repaying more and more. So again, this is something that is very hard to solve if you think of constructing a money. But technology as such, brilliant, no doubt about that.
I guess I missed out the introduction part, so I'm the CEO of the Latvian Banking Association. Before assuming this position in January this year, I was for well over 10 years with the IFC, which is a private sector development lender globally, the EBRD, but a global one. And so I was leading the work between 2010 and 2013 in East Asia Pacific as a regional manager, and before that in Europe and Central Asia. So coming back to the question, to toss a bit the conservative and the non-conservative end of the discussion. Well, actually, it was earlier this year where we came together 8 associations in Latvia representing the financial sector and related industries broadly to respond to the European Commission's FinTech consultation. And one of the items that we tackled was exactly the question that you asked, which is that we absolutely want to see the blockchain as a technology develop, and we encourage the Latvian authorities to also find ways to start testing, because it's only if we do this that we will start creating some awareness and some knowledge within the regulators that we need to be able to move forward. And if we look at the broader challenges, smart contracts, how will we be managing various databases in Latvia going forward, maybe 10 years fast forward, if we look at what Norwegians are doing today, for example, in mortgages, mortgage registration, they are processing 50% of applications to the public register automatically, and they plan to increase this up to 80-90%. So the remaining 10% that are flagged for various exceptions would only be processed by the human. So that's the kind of discussion that we need to have, and we see the applications that need to be developed, no doubt in that.
Well, first of all, because of the technology, it allows the broader use of this, and the real-life implications are really high. So, and at the moment, we already see this. Let's say there are examples when the blockchain technology is used. Let's say when airline settles its payments with its major agents. I think this example is from Russia, and also the examples from presentation. From Alex's presentation, where it's used for land register. So, and in this case, it's just necessary to differentiate the hype, which is speculative hype, part of the technology. And of course, from on the banking side, we are looking at this technology, and already have plans, at least in our bank, of how we can utilize the capabilities of different blockchains. However, at the same time, having read the news, let's say yesterday, when there was a flaw in the Ethereum contract, which locked out $200 million, well, makes us, a little bit still scary about using it like today or tomorrow. Thanks.
Okay, I missed my introduction too. My name is Eduards Bezprozvanovs. I'm CTO of Twino. I also have 15 years experience in banking too. So. No. I think that at the moment a lot of companies, really rich companies, including financial companies, are investing and researching actually what's happening. I'm really not sure that there was some kind of initial target set, okay, please find the next financial service, we will move on the blockchain. Most probably it was like a real R&D approach, and knowing the power of those companies, I really believe in the next few years they will come out with something we are most probably not imagining at the moment. Looking from the technical side, the easiest services to transfer to the blockchain technology is, of course, payments and currency exchange. So I think that we have to expect something there.
So I will try just to summarize everything what was said before. So the blockchain is really the innovative thing, but the most common mistake what I've made quite often, people are trying to just combine the old services in blockchain, but it has absolutely different nature by itself. So the Stone Age was ended not because we was out of stones. The Cooper Age was ended not because we was out of a copper. It was just the next evolutionary step. And I think the same happens, absolutely the same happens here. So then people are saying the criminals are using Bitcoin. I think it's even the good signal, because the criminals, instead of all of us, are not limited by any regulations. If they see more efficient tool, they will just take it and use it. If it's risky, they will never take it. So, like good examples, between Mexico and US, the border service captured over 50 flying drones with drugs. Can you imagine, like 50 years ago, someone was trying to transfer drugs to what they're using? Cars, they're using human transportation, human trafficking. This is just the new tool. So, and why the criminals start to use it? Because they see how it's efficient can be. And they was even before Amazon. And the same happens, absolutely the same happens here. So how many money, how many US dollars was used for criminal activity? I think the most, because it's most common money. But at the same time, then criminals realize something more efficient, they switching for it. You know the history about the NASCAR. So NASCAR was happened like a result of the dry law in US. In early 30s, 1930, then the dry law was in US. The criminals started building more faster cars, just to get away from the police, and just deliver their goods more faster. In result, right now they know the NASCAR racing. They forgot about the bad side of history and they take the good side of history. And here, absolutely the same. They see new tools. The criminals realize how efficient they can be. They show us the possibility. But all responsibility, how we are using the tools, is still on us. Not the tools killing, humans killing. And regulation just can make the market more safe. And the market can be more efficient if the regulation just defines the rules. Instead of building the limits, instead of building the borders, if you're defining the rules, how we acting, how we closing the deals. So that can be more efficient.
I feel I need to react on this one because I find it very difficult to agree that criminals are advancing the development of mankind. I don't believe this, and I haven't seen this in a history. And also I find it very hard to believe that criminals are somehow much smarter than all the central banks combined and all the rest of the people. So that's just to make a point.
The same feeling. I think you just plainly spelled out and allowed us to say that banks in Latvia definitely do not want to bank the criminals. That's plain and simple. And given the risks present, they need to be cautious. That said, we from all the examples that we discussed, we will proceed and we will continue working on the applications of blockchain where we see the positive value. And I think, in fact, my colleague from Rigacomm Bank can probably cover even in more detail, but the one aspect that we are looking at is how to enable, for example, know your client utility, maybe through some of these technologies. And that's the discussion that we look forward to developing in 2018. And that's one of the applications where both the efficiency, the transparency, and the security that the blockchain provides can actually be exploited to a great extent.
Okay, so as I can see, we are all agreed that in general the blockchain technology is good. The present realization in the form of Bitcoin may be not so good. The fact that it's being used by the criminals is completely awful. But if we imagine that in the future, all together we have managed to create, based on blockchain or some other better technology, to create something which is fully transparent, which is AML compliant, and we ended up with a self-sufficient single world currency. How would that change the way that the banking world and the financial world looks today? Because as it is already now, Bitcoin is more or less self-sufficient, meaning that it basically doesn't need any currency conversion. It doesn't need any transactional services from banks. So, but at the same time, we all know that the banks are created and currently run by some of the smartest people on the planet. So surely the banks will see opportunities how to get advantage of this situation. So how do you see the future of the banking if we imagine such wonderful currency in place?
Again, sorry for being a bit cynical, but I find it very difficult to imagine that the whole world will share a single currency. And I do believe in people that have received Nobel Prizes and that have some kind of scientific background and all that. And when it comes to finance, there is a very fundamental theory around optimal single currency areas. And basically it describes why sort of you have one region that shares a single currency and why it's not good that a broader region shares a single currency. You can ask anyone in Greece how they feel about sharing euro together with Germans, and everyone would say that, well, probably we are not a perfect match in sharing the same currency with the Germans, because sort of, yeah, then interest rates are initially too low, we borrow too much, then we create a massive crisis and all that. So even Eurozone is struggling and barely being able to keep itself together. So I find it very, very difficult to imagine that the whole world will suddenly and miraculously become a good fit for single currency. Again, it will create a lot of misery, similarly as you can see in Greece and in some other places that are not a perfect match for some good currency that is out there.
I'd actually take this a bit more philosophical level, going back to the point that our colleague made, which is your whole point on Bitcoin is that this is decentralized governance, right? And in fact, if there is one thing, we will need to learn to live in a much more decentralized world. And if you take that as a line, I'd say counterintuitively, the single currency is not what a decentralized governance model will produce. It will be more that we might end up having thousands of different currencies. We will, we some time ago we had a discussion as part of the Digital Freedom Festival preparation on digital identities. Most likely in the coming 5 years, each one of us here in the room will have significantly more than one digital identity with which we will sign and confirm our transactions. So it is. I think this is more philosophically coming back to the point that Carlos was making, that we somehow yearn for one central governance. In the reality, the world will be moving into a decentralized governance. And in fact, the regulatory aspects that are currently being introduced, like the Payment Services Directive coming into force that will impact the payment services market significantly. It's all about a lot of players in the market and a lot of trouble for all of us figuring out how to actually manage the decentralized system that will be set up within EU with all sorts of third-party providers, including, for example, players in Latvia being able to be third-party providers to licensed players in other markets. So that's the world we're moving in.
Addressing this issue, it was mentioned that in all time, like people were referring to some central bank. Was it like a gold, or was it like a central bank who is like somehow guarantees the value of the money? So with the blockchain or with Bitcoin, this central entity is basically a cryptography. It's a math which guarantees this the logic of this system. However, the world in which we live, we're not living in a binary world, which is like only black and white. There's lots of human interaction going on. So when we're speaking about the know your customer process, it's not about just looking at the person's transactions. It's just seeing where the person really sits, where it really works, what it does. I mean, and how he or she works. So, and this is something that these processes will be aligned in the nearest future, taking these capabilities of the blockchain, and it will make it more efficient. Thank you.
I don't believe that there will be such one currency. Thank you.
So, using the one single instrument for all purposes, I think, is just not efficient. And when we're talking about the one central currency, like it use the existing and acting right now. So yes, it helps to keep all the money accountancy between different countries to get the one single ground, but it's not efficient if we are talking about the separate countries. And the same in EU. So the multi-dimensional world, it's also required multi-dimensional instruments, and sometimes the local instruments can act more efficiently. And if you're talking about the electronic money and electronic tools, so then you can create for local obstacles more efficient instrument. This is according to landscape, provide you more efficient sources, and these can provide efficiency. And if we are talking about does we need one single central money? Yes, I think so. Because it's more nature for a human just to take one single point for all the calculation, for all the economical operation, just to realize and equalize them and understand the cost of all services in the different local currencies, in the different local money.
So to continue the discussion, the common view, as I understood it, is yes, there will be probably cryptocurrencies with some modification. They will be probably one per country, so still it will be a sovereign body regulating its cryptocurrency, whatever it could be, Latvian Bitcoin, Estonian Bitcoin, and so on. And there will be banks who will exchange one into the other, or maybe they will exchange by themselves based on some kind of algorithm. Still, if we imagine such situation, a lot of the things, a lot of the services which are now provided by the banks would be implemented and would be part of the money itself. So would it be correct to say that the role of banking would become more focused on loans and collection of deposits? Or do you see still some services in that brave new world of cryptocurrencies, be it one or many?
On that, I would actually agree. I do think that banks will definitely lose their market share going forward in financial services. I have little doubt about that. I do believe that when it comes to sort of everyday settlements, fintechs or some of the fintechs will do quite fine. No doubt about that. Blockchain technology is a fantastic one that is also adopted by banks. So this will supplement in many cases the need of banks, and there are a lot of inefficient processes in banks. If you think about trade finance internationally, it hasn't changed from medieval times sometimes. So there is room for improvement, no doubt about that. But 70% of banks' kind of value and what banks are doing is collecting deposits and lending. And on that part, again, I struggle very much to see that somebody or something would replace banks. But the remainder is 30%, and that's something where I do think banks might end up playing losers game, and their market share might shrink.
Well, we don't have to wait for blockchain or any blockchain technology to kick in to see that this is changing. So how you are paying, let's say, for parking? You are using Mobili for that. Is it a bank? No, it's not. So we have, at the moment, we already have the whole segment of companies who are flourishing and doing this retail payments better than banks do. So this will of course continue, and this I agree that this will take this operational part out of banks. However, there are these boring things which these companies don't really want to do. Like, once again, what these clients do, what's the source of money, what's the business of the person, and so on and so on. Who will to whom, which business to finance, which not to finance, and so on. And these questions will remain in the hands of humans. So therefore, and that's the role which the bank will play, and being like a part of the infrastructure.
To supplement my colleagues, I'd say the boundaries will blur in the coming years would be a way to describe this. I think quite a lot of examples already. If you look plainly at the, for example, employment statistics in Latvia over the past 8-9 years, the total employment in the banking sector has decreased by 35%, yet the total employment in the financial sector and related industries has actually increased by 4,000, up to 17,000 in total. So that's, I think, how we look at the future, that we are not really, all of us here are not really competing for a market in Latvia, but we should be looking at the banking union, definitely the EU banking union, which if the projections hold, 2018 will be the year when the key next steps will be put in place, such as the deposit guarantee scheme across the EU, and then knowing the digital development of the Latvian financial sector, where pretty much all the processes are digital already now, which is significantly different to the many incumbents in the other EU markets, and it's a 500 million resident market with a significant potential. So that's the way to look. Now how this will play out, we can probably meet in 3-4 years and take a stock.
I agree with the colleagues, and I think one of the things that can also quite significantly impact is if some of the global players will decide, okay, this region is interesting, then I think we can just then sit and watch.
So, my opinion, what happens right now, the speed of all actions and all transactions are increasing. So then the world was open, the internet, so they realized that you can perform all the trading, all the sales, all the operations 24/7. But lately they realize what tools, what they are using, the financial tools, they are not so fast. Even if you're paying by credit cards, it's taking days. When you're asking services from banks, they also spending a lot of time verifying, checking your transactions, performing your transactions. And this is the part what they are constantly increasing during the last 10 years. Because the healthy economy is the economy, then it can perform transactions as fast as you need. So instead of performing one deal per week, you can perform like 20, 50 deals per 1 week. And in result, this is increasing efficiency of the business, and this is increasing efficiency of the economy. And this is what really happens right now. So the more faster economy, more faster businesses, they require more faster sources. This is why fintech sector is growing right now. So everything is changes. So, and we're getting a lot of electronic financial services. Mobility, Twino, a lot of companies providing right now the services. And the banking, I will think, is also changing. So in nearest time, the banking will be another one service provider. And how efficient the banking can provide the services, how efficient they can provide, how flexible they can be, and how better price, competitive price they can provide. So it's exactly the question about the survival.
Sorry, Alex, again, I feel I need to react. Efficient, yes, but efficient doesn't mean effective. And the example I always use is Warren Buffett, the world's best investor. He's close to 90 years old, married to Latvian, by the way, Latvian lady, but that's not important. Anyways, he lives in Omaha, Nebraska, and he says it's far better to make a couple of good decisions per month and make those decisions in a way that not that they are efficient, but that they are effective. And then he makes a joke about all the hedge funds and all the technologies and everyone else that tries to be very efficient and makes very smart decisions every minute or something. But then again, check out the track record, and Warren Buffett for the last 50 years has outsmarted every hedge fund, every guy in New York, etc., etc. So efficient and effective are two different things, and you should be careful where you want to be efficient and where you want to be effective. Again, this might differ. When it comes to lending, when it comes to large masses of money, when it comes to safety of your deposits, when it comes to large investments, when it comes to large loans, then effective is more important than efficient. When it comes to kind of payment for coffee or something, yeah, efficiency is probably the most important thing.
Sorry, I didn't keep anything in mind, and I didn't want to attack you, Sue. But yes, I absolutely agree, and I read and I know the Warren Buffett, Sue, and I like his quotes. But once again, there is one huge mistake what people are making quite often. So then you're talking about the distributed, decentralized, and centralized. So the centralization and decentralization, it's again question about the efficiency. So you know the administrative tasks. So if you have the one single control center, so you can fastly react. But if you have a lot of requests, then it became non-efficient. So then you should share, or you should split them. So the same about the business efficiency. So you have, if you have like very distributed, very decentralized infrastructure, it became more complicated. So you're spending a lot of time, it's very hard to control, you became not efficient. The same here. So the centralization, it's make you like single point of the failure. And I think more appropriate word is not just decentralization, is distributed. So the distributed system can be still efficient. You can create local centers, and they can cover the areas and operate more efficiently. And this is a balance, because you can adjust the structure as much as you need. Does the country require a central bank? Yes or no? So maybe 3 countries like Latvia, Lithuania, Estonia need just one single central bank. It can be more efficient. So it's just questions, once again, about efficiency. And if you talk about the bank, like this central structure, so the fast reaction, if you're performing a lot of small payments, a lot of small services, it's quite related things. But yes, I agree. So maybe sometimes you should relax and perform one deal per week and do not worry about anything. So, but once again, if you're talking about the automatization, so someone should work instead of you. Maybe someone should trade instead of you. Maybe someone should pay instead of you. So it's a question about the optimization once again.
Thank you. Actually, this reminds me of a theory of probably the best business guru of all times, Rigacomm, who believes that for a business to be successful, it needs to be efficient and effective in the long run and in the short run. So both of you are right. But let's step back a little bit from the discussion of blockchain and Bitcoin and come back to what Sanda mentioned about integration of Latvian banking system into the EU banking system. So, as I understand, this integration will happen more and more in the future. And since I'm working for Proact IT Latvia since almost 20 years ago, and quite many of our customers are banks, what I have seen during those 20 years is that Latvian banks are way more technologically advanced than generally EU level. So, as a result of this integration, do you see new opportunities for Latvian banks to be able to offer some services in EU? I know that fintech companies are doing that quite successfully already, probably for the same reason. But do you see new markets opening up, new services being created, so the market for Latvian banks can be expanded outside Latvia into the European market?
Thank you, and I think very timely discussion on this topic. As I briefly mentioned, we're closely following the discussion on the banking union, and we're in fact quite good, well placed, knowing that it's Mr. Dombrovskis within the European Commission who is advancing these initiatives. And from what we hear is there's a absolute commitment to one form or the other, adjusted, adapted, but in some way to get through with the introduction of the EU-wide deposit guarantee scheme, which means that any deposits in a EU-licensed banking institution up to 100,000 would be guaranteed for any depositor, which is a crucial component of, one can say, a plus step in true movement to full banking union at the retail level. Now, so that's one component that we're following. Then there are a few other developments. Increasingly, the European Banking Authority is issuing unified guidance, which we actually welcome. It helps to level the playing field within the EU and to lessen the regulatory arbitrage that's otherwise present. We're also, as much and as on any occasion that we can, we are stressing that the Latvian, in fact, all the Baltic banking sectors are welcoming of EU-wide regulations. So that means we see it far better that on any of these topics, EU would issue so-called regulations that are directly applicable as opposed to directives, which still need to be transposed locally, which means then you start having differences in the application, and talking of the efficiency, it's not there. So with these things taking shape, we see that the access to the market will be opened, and to the technological development, exactly that. And the best way to see this is that the cost-to-income ratios of the Latvian banks, as of the end of, for example, 2016, was at 40%. The German banks were spending 70 cents on a euro for their administrative expenses. So 70% cost-income ratio, and the best digital-only banks in the US are at about 30%. So if we can maintain this level of competitiveness, we clearly will be competitive in the EU-wide market, and then we will continue working on these regulatory aspects, and then I'd say the question will be on the risk appetite and the appetite of the banks to actually go out and expand. If you look at some of the examples, I'm sure you've seen that so currently in Latvia, the average deposit per inhabitant is at 4,000 euros. So that's the level. If you look at the size of the average deposit that digital banks or challenger banks, for example, in the UK or Germany are attracting, this is in the range of 20, 30 euros per depositor. So we are talking of times the scale that one can generate, and some of the challenger banks are generating 1 billion in deposits over a 12 to 18 months span, which is in the range of let's say, add up 18,000 clients with the deposits ranging between 40 and 50 or 30 to 50,000 euros. Is that you're already sort of a significant banking institution if you look at the Latvian size. So that's we're a relatively large banking sector for the size of the economy here in Latvia, but at just below 30 billion in assets globally looking, and even EU-wide looking, we're just a small entity altogether. So there's a huge growth potential if one wishes to exploit it.
I fully support this position that our banking sector is positioned quite well on the European map, and it's not only about the technology, it's about the mindset of people who are here, because here we were born and raised in the multi-currency environment, and in Europe it's not like that, so in every country they usually stick to its own currency and live in this paradigm, and here the whole sector basically is built as a multi-currency banking machine. So and this gives a lot of advantages, because having all these new ways and new currencies, it places us in a competitive position.
If I can add a bit, I think as always in life it's not black or white, there are many shades of grey in between, and the same with this thing. If you are going to collect a deposit from somebody in Greece, be my guest, do it from Latvia, do it from London, similarly as Revolut is doing. I think there are many good examples. If you do your AML background, anti-money laundering background check properly, then why not? But completely different thing is if you're going to make a loan to somebody in Greece from Latvia, then I would say this is probably not a good idea. So again, you can't generalize. If you want to make a fully fledged bank, you can't just have cards and deposits. You always need to think about the lending side and where you place the money and that part. And in that part, whether you like it or not, there is a very good principle from medieval times in banks, and this is called church tower principle. Church tower means that as a bank you go up to the top of the highest church tower in your local town, and as far as you can see you are lending, and you don't lend any further than that. And you can check all the booms and busts throughout the last 400 years. The banks that have been following this principle have been doing quite well. The banks that have not been following this principle have either failed and are not around, or have not been doing so well. So again, don't generalize, be careful on what you're talking about. Deposits or loans, two completely different things.
I see that from my side that mainly banks will be busy with being compliant, because I see that EU really loves you. Good luck. No, okay, finally, customer will anyway will pay with the money and will decide which service is really usable and which is not. I'm also not big fan of that I will be billed, I don't know, every day for some 1 cent, so I do not see big benefit of that, but definitely, for companies, yes, that would be a lot of possibilities coming from the blockchain. For the private individual, most probably not so much.
So, I was born in Riga in Latvia, so, and I saw also the word old site, but I'm still thinking the Latvia is the really great place for all technical innovations and for all banking services, because they have multicultural nature by itself, and they have a lot of technical knowledges. Because in Latvia there was a lot of engineering services, a lot of factories before, and all the children, they know how IT is working, how a technical things is working. They can able to communicate on the different languages. They also understand different cultures. And this is huge potential, and we still realizing that potential. Even right now, there is a lot of people who are just gaming to IT, and they are very efficient. They are even more competitive comparing to nearest countries. So even the Estonia and Lithuania, I think right now they are creating the good obstacles. They really create the great market. The Estonia create great economical market, and Lithuania right now creating the great technical and IT markets. But if we're talking about the Latvia, if we can create the economical obstacles and the good technical obstacles, so then I think we can be like #1 country.
Thank you. I think it is time to switch into questions from the audience, and I immediately see one question from our friend from Turkey.
Thank you. First, I have the one criticizing to the banks in Latvia from my personal experience as a foreigner having the residence here. When I went to the one bank to open an account, we always say that the banks are more developed technology they are using. We suppose like that. But when I went to the one bank, they say that to opening an account take 2 weeks for the foreigner. From that, I would like to go to another questions, because we know that our time is the community. For a country is the community. Let's say Facebook is a community. Whatever we call like that, it is a community. So if we suppose that Latvia is a community, a social media, let's say, to understand them more easily, because the generation are changing. And they are more get used to use the new products. Let's say that fintech products, they are more easy to understand blockchains, let's say, and bitcoins. And when the Google, Facebook, or such a big companies, worldwide companies, decide to enter the financial market, how the Latvian banks feel about that? Are they ready really for that big competition? Because the technology where it takes us. Because some years, until a few years ago, the Google just was maybe like the search engine, but now they are everywhere. When there is, because during the forum there was the one question: what about the world currency? It seems like a little fantastic. But when the Google and Facebook enters into that market, being a fintech player, then how they will feel the Latvian banks? Are they really such a really big competitions? I would like to make one adding. Already they are, in fact, already they are in that finance, because we know that.
You can continue.
Okay, I can continue. Already we know that Google are already in the finance, because with the AdWords and AdSense, they are getting the payment, or they are paid the people. So it is not a fantastic idea to enter in fintechs.
Great. So we'll probably divvy up the questions. I'll take the first one on the opening the accounts. I think this is actually one of these developments, as one of the colleagues here mentioned, on the Know Your Client regulations that apply to all. In fact, the it's a common EU-wide and in fact worldwide phenomenon that the banks are checking on the client and deciding whether they will onboard the client or not with all the obligations. So that takes time. And I think whether you take London or in fact Washington or New York, it is increasingly difficult for new clients to get onboarded with the banks that they've not worked previously. That is indeed the reality. And add to that the fact that the Latvian banks have been reviewing their client base and with the more stringent anti-money laundering regulations and the standards that we've introduced to deal with the inherent risks that the country faces being located where it is located, and that we want to make sure that the global move of 1 to 2 trillion of bad money does not approach anywhere near the Latvian banking sector. So that's the result of this. And so, if you look at how this can develop, like it or not, at some level, having a banking relationship for a company will be something that one wants to maintain, because the way the global, and we're not talking of the Latvian or the EU regulation, but the way the global standards are working, one can see that maybe in the coming 5, 7, 10 years, if a company will not be really known in any of the global databases and its activities can be fully traced and tracked, it will be increasingly difficult to get back. But that's that side. So once you're onboarded, the service should be seamless.
Google and Facebook, briefly, and by the way, it's very nice and very romantic now for you guys. Google and Facebook, of course, this is a big concern for banks if they go really big when it comes to financial services. Apple has tried out, General Electric historically has tried out. We don't see this as a major success. And again, there are a lot of reasons, and I could make a very long list why it is difficult to be a bank. And it is even difficult to issue cards and attract deposits, not to speak about loans and all that. So there is this church tower principle from medieval times that is very much alive. But again, I would compare this to news agencies. When internet was kind of advancing, everyone was saying, well, nobody would read local news, all would disappear, there would be no newspapers, no local news channels whatsoever. The truth is somewhere in between. It's not black or white, it's many shades of gray in between. We see fewer local news media out there. We see that more people are kind of switching to, I don't know, New York Times or something else, but there is still some local content. For banks, it might be something similar. But of course, it remains a big unknown and big question mark. If Google decides or Facebook decides to go big after financial industry, we shall see. I'm quite humble on that one. I think they are quite smart, but then again, there are no good surprises neither. For General Electric, with all of their might, they tried to do this for the last 40 years or something. Apple has tried to do it for the last 10 years. Also, nothing huge comes out of it. So it remains to be seen.
Well, commenting the move of the larger information giants like Facebook and Google moving into financial sector, I think that under threat will immediately fall the companies like Revolut and N26, the bank, who are focusing on retail and high volume, small amount payments. So that's most likely be the first victim of such move. But larger banks, which work primarily with corporate customers, and it's not something that will be immediately affected.